You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 15th day of May, 2023. Hope you all had a great weekend. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. First live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. Now that's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and right there at the top of the page, there's a button that says free trial. Click that, complete the registration form, and then we'll get everything out to you that you need, because you're going to have access for 5 consecutive trading days. It doesn't matter what day you sign up. It doesn't matter what time of day you sign up. You'll get 5 consecutive trading days. So even over a weekend, you can sign up. It's not a problem. mytradingiq.com. And then watch your inbox, because you'll get some emails with some explanations and some directions and instructions, etc. No credit card required. So, once the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, come back at 12 noon Eastern for this broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast. Best way is to go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is open the email, click the link, and it will automatically log you into our platform. And that's the better way, I think, because it gives you access to the question box so that you can ask questions or participate in the discussion. Now, there'll be days you're out of the office, away from the desktop, but you still want to join the broadcast live. You can do that by simply pointing your browser to our YouTube channel, which is youtube.com/CFRN. Also, because we not only broadcast live every day on our YouTube channel, but we archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. So for those folks that are still working the day job and can't join the afternoon broadcast live, when you come home from work at the end of the day, youtube.com/CFRN. Those who are new to the world of CFRN, I encourage you to scroll back 6 weeks, 6 months, a year, 2 years, even more, to really get a good feel and understanding of who we are. Not just who we say we are today. Anybody can say anything today, but what were they saying 6 weeks ago, 6 months ago, a couple years ago? Now, I don't expect you to listen to every broadcast. Just pick some at random. Doesn't matter. Because after you do that and fast forward to the part where I'm doing the recap of the alerts, Michael's doing the recap of the live training room, you'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. So we'll open with a word of prayer as we do. Now, our topic for the last few days has been better than normal. Most people just want to be normal, but we aspire to be better than normal. So we'll wrap up that topic today. And our scripture is Galatians 5, verses 16 through 23. And I'll share with you from the Message translation. My counsel is this: live freely, animated and motivated by God's Spirit. Then you won't feed the compulsions of selfishness. For there is a root of sinful self-interest in us that is at odds with the free spirit, just as the free spirit is incompatible with selfishness. These two ways of life are contrary to each other, so that you cannot live at times one way and at times another way, according to how you feel on any given day. Why don't you choose to be led by the Spirit and so escape the erratic compulsions of a law-dominated existence? It is obvious what kind of life develops out of trying to get your own way all the time. Repetitive, loveless, cheap sex, a stinking accumulation of mental and emotional garbage, frenzied and joyless grabs for happiness, trinket goods, magic show religion, paranoid loneliness, cutthroat competition, all-consuming yet never satisfied wants, a brutal temper, and impotence to love or be loved, divided homes and divided lives, small-minded and lopsided pursuits, vicious habit of depersonalizing everyone into a rival, uncontrolled and uncontrollable addictions, ugly parodies of community. I could go on. This isn't the first time I have warned you, you know. If you use your freedom this way, you will not inherit God's kingdom. And now we're at verse 22. But what happens when we live God's way? He brings gifts into our lives, much the same way that fruit appears in an orchard. Things like affection for others, exuberance about life, serenity. We develop a willingness to stick with things, a sense of compassion in the heart, and a conviction that a basic holiness permeates things and people. We find ourselves involved in loyal commitments, not needing to force our way in life, able to marshal and direct our energies wisely. Legalism is helpless in bringing this about. It only gets in the way. among those who belong to Christ, everything connected with getting our own way and mindlessly responding to what everyone else calls necessities is killed off for good, crucified. Again, that was Galatians 5, verses 16 through 23. Whether we want to admit it or not, we all have bad habits. Those things we do and say that we wish we didn't do and say. Some habits are difficult to break. Some are incredibly difficult to break. We may be prone to laziness or gossip, or we may have formed a habit of abusing substances or waking up and eating a whole cake in the middle of the night. Bad habits. Whatever it is, we've probably either become comfortable with certain habits in our lives, or we think they're too difficult to overcome. Why is change so challenging? Now, the Apostle Paul addressed this in Galatians 5:16 through 17. He tells us that we must live by following the Spirit because we want what is against the Spirit. Basically, what we know to be right and what we know to be wrong are at war with each other. So when we try to do the right thing, there's literally a war going on trying to prevent us from doing just that. We could also say that normal is at war with better than normal. Here's some takeaways from the scripture that we just read. Normal conforms to the world, but better than normal renews the mind. Normal gives in to temptation, but better than normal trusts God for a way out. Normal gratifies fleshly desires, but better than normal walks by God's Spirit. Normal gives in to worry, but better than normal prays for strength and guidance. Normal allows evil to win. Better than normal submits to God. Normal ignores sin. Better than normal repents and receives forgiveness. Bottom line about our bad habits is that if we focus on beating them, it may be hard to do just that. But if we strive to make our lives healthy, many of the bad habits we've adopted will fall away. What we focus on is what will grow stronger in our lives. Pastor Craig Groeschel says this: if it is important, you will find a way. If it's not, you will find an excuse. Instead of making excuses about our poor diet or how we speak, let's find a way to grow from normal to better than normal. And the best way to overcome our bad habits is to continually renew our minds by thinking about the things laid out in Philippians 4:8. Things that are true, honorable, right, pure, beautiful, and respected. Our actions will not change until our minds change. So ask yourself, what are the bad habits that you continue to struggle with? Are there things you do or words you say that are normal but not beneficial? If you aren't sure what needs to go, ask God to reveal what needs to change so that you can begin living a life that is better than normal. Join me in a word of prayer. Heavenly Father, we come before you today, reminded of the words of Paul in Galatians 5, where he exhorts us to walk in the Spirit, to bear the fruit of the Spirit. God, we ask that you help us to live out these values in our own daily lives. We desire to walk in the Spirit so that we will not gratify the desires of the flesh. Help us to resist temptation and to live in a way that honors you. May we be led by your Spirit, not by our own selfish desires. Lord, we pray that you would help us to bear the fruit of the Spirit in our lives. Help us to exhibit love, joy, peace, patience, kindness, goodness, faithfulness, gentleness, and self-control. Help us to be people who reflect your character and your love to others. We ask for your help in putting to death the works of the flesh, such as hatred, jealousy, anger, and selfish ambition. May we put on the new self that is created in your image and live a life that is pleasing to you. Thank you for the gift of your Spirit, who empowers us to live in a way that is consistent with your will. May we never take this gift for granted, but always seek to grow in our relationship with you and to bear good fruit that will last. These things we pray in Jesus' name. Everybody said, amen. Amen. Happy Monday. All right. If you're tuned in via the YouTube channel, you already know the title of today's broadcast has to do with the importance of understanding price action. Everybody's heard about it, some understand it, some wonder about it. So we're going to talk about it for just a few minutes here after I give you the numbers from around the world. We're going to start here in the US with the cash markets, or the indices as they're called. Currently the Dow is down 25 points. The NASDAQ is up 55. The S&P 500 is up 2.5. And the Russell 2000 is up 15. Closest thing to a mover and a shaker would be the Russell, up 15 points, which is just shy of 1%. In the commodity basket, crude oil up $1.19, trading 71.24 last. That's a gain of 1 3/4%. Gold up $3.60, trading 20.2350 last. Silver up 11 cents, trading 24.26 last. The Asian markets at the close, the Nikkei posted a gain of 238 points. Shanghai rose 38, and for the Shanghai, that's a gain of almost 1 1/4%. The Hang Seng added 343 points, which is 1 3/4%. And in the European markets at the close, FTSE up 23, the DAX up 3, the CAC up 3. That's some pretty quiet trade. Now, we had a green day in Asia. It was a green day for the UK. And at the moment, it's a mixed Radio Monday here in the US of A. Got the Dow slightly in the red, NQ positive by about 0.5 point. S&P up just 3 points. Russell 2000 leading the pack to the upside. 14 points, almost 1%. So, what's this business about? Price action. If you've been around trading any length of time, you've heard people talk about it. Some people boast that they don't use any indicators or oscillators. They just use price action. And some people will tell you that price action, hang on for me 1 second, I'm sorry. Sorry, it was on the charger. I thought it was, no. Anyway. So, as I was saying, some people will tell you that price action is a bunch of hooey. They rely on indicators and oscillators. Others say indicators and oscillators are a bunch of hooey and they rely on price action. Who's right? Well, here's my answer, is if you learn to properly use both. Now, I'm not talking about a chart that's got, 10 different indicators and 10 different oscillators, which just leads to confusion, anger, resentment, all kinds of things. I have enough voices in my head telling me what to do without having 20 different things on my chart screaming at me, half of them telling me to do one thing and half of them telling me to do another thing. So a simple set of indicators and a basic understanding of how price flows, that's the sweet spot. Reading price action on a stock or futures chart is a crucial skill for any trader looking to make informed decisions. Price action refers to the movement of the price of a security over time as reflected on a chart. It could be a daily chart, an hourly chart, a weekly chart, a 1-minute chart. By reading and interpreting price action, traders can gain insights into market trends, identify support and resistance levels, and understand where potential future price movements may be. So let me try to explain what it means to read price action on a stock or futures chart and maybe help you do it more effectively. And those of you that are members can, of course, always book a one-on-one mentoring session, and we can speak specifically to that topic. Price action is essentially the behavior of market participants as reflected in the movement of the price of a security, whether it's a stock, futures contract, Forex, crypto. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Price action represents the supply and demand dynamics of the market and can be influenced by a variety of factors, including economic news, political developments, and overall market sentiment. What are all the talking heads saying on TV? Are they all bearish? Are they all bullish? My hint is when they're all bearish, it's probably time for the market to turn up, and they're all bullish, it's probably time for a dip. analysts tend to upgrade stocks after a big run. So, I mean, here's a respected analyst and says, we're giving stock XYZ a buy rating. They're doing that because it's already run up an incredible amount. And we know that once price puts in a substantial leg, whether it's on a 1-minute chart, a 30-minute chart, a daily chart, a weekly chart, or a monthly chart, at some point, there's going to be a retracement. So I've always joked and said when analysts come out with a buy rating, I sell, and when they come out with a sell rating, I buy. Although I don't really trade individual stocks too much anymore because futures just give you more bang for the buck. By analyzing price action as it flows, traders can gain insights into these different factors and understand how they come together so that you can make better trading decisions. Price action is reflected on a chart, of course. It is a graphical representation of the price movement of a security or futures contract over whatever period of time you choose to look at. There are many different types of charts. The most common are candlestick charts, and some people use line charts. Candlesticks provide a more detailed view of price action, showing the open, the high, the low, and the closing price for each time period, for a daily candle, for a 30-minute candle, for a 1-minute candle, or monthly. Line charts, on the other hand, show the closing price of each time period. Both types of charts can be useful for reading price action. When reading price action on a chart, there are several key factors to consider. These include trends, support and resistance levels, and patterns. A trend is the general direction of price movement over a given period of time. Trends can be bullish, upward, bearish, downward, or range-bound sideways. And over the last couple of weeks, we've learned to deal with these range-bound markets. By identifying trends, traders can get a sense of the overall market sentiment and adjust their trading strategies accordingly. Support and resistance levels are price levels at which the market has shown a tendency to bounce off of or break through. Support levels represent buying pressure, while resistance levels represent selling pressure. By identifying these levels, traders can make better decisions on when to enter or exit a trade. And while we're not price action, or not, while we're not pattern recognition people per se, there are certain patterns in the market that can be valuable to you. Typically, if you're trading longer term, swing trading, that type of thing. These patterns are recurring shapes or formations that can give you a clue to what the next move may be, whether it be up or down. There are many different types of patterns: triangles, head and shoulders, double tops, double bottoms. By identifying these, a trader can anticipate potential future market movement and trade accordingly. I mean, if you've got an area that you know is a support level, like a weekly trading zone, as price gets there, you expect it to find support until proven otherwise. If it holds that zone and consolidates and then begins to move higher, well, now you have an opportunity where you want to be long. When price rallies up to a weekly trading zone or a previous swing high, you anticipate resistance. So if you're trading long, you know to exit as you're approaching that point, that weekly zone or that previous swing high, where the market may very well find resistance. Well, what if it doesn't? I'll leave money on the table. There'll always be another trade. Just focus on getting your goal for the day. Couple tips for effective price action reading. Use multiple time frames. Looking at price action across multiple time frames can provide a more complete picture of market trends and potential future price movement. As you know, on this broadcast, unless this is your first day here, we look at the daily, we look at the 30, and if you've been in the live training room, then of course you know that we execute trades on a much smaller time frame. Michael uses a 7-tick range, the ES. Some of the other markets he uses a different, smaller range chart. And a range chart simply means that every candle is or every bar is exactly the same height. On a 7-tick range chart, every bar or candle will be exactly 7 ticks tall. There's no time element on a range chart. Everything is dependent upon price. With a 5-minute chart, you're going to get a new candle every 5 minutes. Even if price hasn't moved a tick, it's going to spit out another candle. But on a range chart, the only way to get a new candle is for price to move up more than 7 ticks or down more than 7 ticks on a 7-tick range. Volume can play into price action as well, often more so with stocks than with futures. But if you're trading futures contracts on things like, I'll throw crude in there, gold, wheat, corn, commodities that have true supply and demand. Remember the indices, there's an unlimited number of, we're currently trading the June contract of the S&P Emini. There's an unlimited supply, okay? But with crude, gold, silver, there's not going to be any more. When God created the heavens and the earth, he created all the gold and all the silver and sewed it up in the belly of the earth. And on the 7th day, he rested. They won't be making any more. So, and with stocks have a finite number of shares. Now, a company can usually authorize, written into their charter, they can increase the number of shares that they have. And that's something you want to be careful for, because if a company increases the number of shares, then that dilutes the value of what you own. So again, volume, high volume can be signs of strong buying or selling pressure, and can also confirm potential support or resistance levels. Always know when there's an important news or some kind of economic report coming out. Economic news, political developments, market sentiment can all influence price action. When you sit down to trade every day, you need to check the economic report calendar. And there's plenty, and they're all free. I think Michael uses forex.com. I use investing.com. It doesn't matter which one you use, but it lets you know that at 8:30 a.m. a high impact report's coming out, or at 10 a.m. a high impact report's coming out. And while some people trade the news, we don't. When the news is about to come out, we want to be flat. Let the news come out. This way, we're not gambling on whether it's going to be good news or bad news. Or are we going the numbers that have been forecast for that report, are they going to be hit or missed? Yeah, it just takes that whole element away by just not trading the news, but waiting for the market to react to the news. Once the market reacts either up or down to the high impact news, what's it going to do? It's going to retrace. And when it finds support or resistance, it's then going to continue in the direction of the initial impulse move that the news or economic report created. Patience. Reading price action is not an exact science. It requires patience and practice. Don't be afraid to take your time. Don't rush into trades based on incomplete information. And again, those who are members, lifetime members at CFRN, you can always book a mentoring session one-on-one where we can go over price action utilizing multiple time frames so that you gain a better understanding of how price flows, because we admit we don't know what's going to happen next in the market. But based on our simple set of indicators and price action, we know with a great deal of certainty what the next high probability move is in any market. Once you wrap your arms around that, it just kind of becomes common sense. We say it's logical, which brings us to Logic 247, which is our 24/7 around the clock Emini alert service. I think last week we ended up with, oh, that was at 7 a.m. I'll check and see how we ended up for the week last week. But where we are this week, at week 250, over the last 250 weeks, we've issued over 14,000 individual alerts. The markets open Sunday night at 6 p.m. Eastern. So as of 7 a.m. this morning, when Valerie did this recap, and she'll update it this afternoon and again this evening, we had issued 13 alerts. 4 were still waiting. I think those have been resolved. There's been some additional alerts put out. But at 7 a.m., we had 9 actionable alerts for the week. See, Wall Street hasn't even woken up yet. We had 9 actionable alerts, of which 1 or 11% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, we've averaged over the last 250 weeks 20% or less of the alerts being stopped out. Last week, we finished up like this. In week 250, last week was week 249. We had a total of 58 alerts. 10 never triggered. We had 48 actionable alerts, of which 5 or 10% have been stopped out based on the risk profile I just explained. Caveat is you never risk more than the potential profit in the trade. If it's a logic alert, you've got an entry, an initial target, quite often a second, a third, a fourth target, and then a final trade to target. But if you know you're going to get out at the initial target or the second target, or whatever the case may be, you don't want to risk more than that. Otherwise, it becomes bad math, bad science, and leads to a blown up account, which nobody wants. Now, the logic alerts are based on current price action. They can come out at any time around the clock, 2 a.m., 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session, and vice versa. Our original alert service, the concierge trade alerts, call them the CTAs. They come out as a static report shortly after the Globex open, Sunday night through Thursday night. The markets opened last night at 6 p.m. Eastern. I managed to get the report out by 6:10. Now there's two numbers for each market, long target, short target. We use the ES as an example. First thing you want to do when this report is published is you want to make note of where price is at that time with whatever markets you're trading. So using the ES as an example, price is going to be between these two numbers. For the Dow, it's going to be between these two numbers. It's always between these two numbers. So once you make a note on your 30-minute chart of where price is when the report came out, draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues for you so that you know if price is trying to reach the long target or the short target. If price gets above the 30-minute BBC, it's trying to get to the long target. If price gets below the 30-minute BBC, it's trying to get to the short target. That's simple. Now, you still have to look left to spot potential obstacles, support or resistance, previous swing highs or lows, and know how price behaves at a weekly trading zone. Weekly trading zones are published Monday morning for our members and trial members at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change at all. Once you understand how price behaves at the zones, only three things can happen. One of three things. They'll become one of the most important tools in your trading toolbox. But you gotta resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Since this broadcast is open to the public, if you want to grab a screenshot, you can. Michael should be here any minute, and he's going to give us a recap of the live training room. And then we're going to trade live for 30 minutes on the TradingView platform. And then I'm going to recap all the different markets that are reflected on the CTAs there. Now, this is the daily chart of the S&P. We've been going sideways for 1, 2, 3, 4, 5, 6 sessions. Looking for a break out above this upper trend line or this trend line across the bottom here. That's a triangle. Price tried to break out of it and tried to break out of it, and it just continues to go sideways. Now, remember, this is a daily chart, so this doesn't mean that there were no tradable opportunities over all these sessions, because there were plenty of them. Just gave you the recap from last week. But as far, this is what normal markets look like, okay? A leg and a retracement, and a leg and a retracement, and a leg. Now the pullback to the BBC holds more often than it doesn't, but eventually it will trade through it. That keeps the markets fluid and tradable. So here you're looking long and Once price gets below the green line, the BBC, then you're looking short. BBC simply stands for bull bear cross. When price crosses above the green line, we're bullish, anticipating higher prices. When it crosses below the green line, we're bearish, anticipating lower prices. The other indicator, the red and blue one, it's called the CFMA1. I refer to it as blue and climbing, red and falling. Price gets below the BBC, accompanied by red and falling. I definitely don't want to think of anything but being short. Price gets above the BBC, along with blue and climbing, thinking long. Now that's true across all markets and all time frames, not just the S&P, not just the daily. It could be an individual stock, it could be crypto, it could be Forex, it could be the British pound, whatever. Whatever market, whatever individual stock, whatever time frame, price flows the same. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. Except when you get stuck in a range-bound market like this. Okay. Now, last night, these zones are last week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So any alerts issued last night were based on last week's zones. Any alerts issued today are based on this week's zones, which came out at 6:15 a.m. Eastern. So the market opened last night. Remember, 6 o'clock, this was the opening candle. The CTAs were published at 6:10. So 10 minutes into the life of this candle. Price came right down to the weekly zone, which we expect to be support until proven otherwise. And we had blue and climbing, which we expect to be support until proven otherwise. Then price got above the BBC. That's a bullish cross. Blue line crossed above the green line. Now conditions are to be what? Long. Even being very conservative. If you only entered at 41.40, that's an 11-point move up to the long target. Michael is here, so we will cover the rest of these markets after he gives us a recap of what happened in the live trading room. And we spent a half hour on TradingView. Then I'll take the screens back and we'll walk through real quickly those other markets. Michael?
Excellent. All right. Let me grab this, bring it over here, and share this with everyone now. There it is.
Looks good.
All right, so here we go. Good afternoon, everyone. Today's Monday, the 15th day of May, 2023. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here is to sign up for your free 5-day training now, 9:30 to 11:30 Eastern Time. Click on that and sign up for the free trial. Just fill out the little form. It's really a small form. I'll show you. It's really a small form. We don't ask for any credit card or anything like that. Just fill this out and you'll be sent all the information you need to get into the room in the morning. Oops. Okay, so when you fill that out, if you fill that out, you should also go here and look at the trading platforms. I'm going to be showing you mostly TradingView, but I'll be showing you DT Pro and TradingView. When I take trades, I take them here on my DT Pro account. And when I look at longer term things, larger time frame stuff, I look at them on DT Pro as well. All right, but for the short term trading that we do in the room in the morning, I'm going to be using TradingView, and that is what you'll be watching. All right, so if you have DT Pro, great. If you don't, you can download it right here. If you have TradingView, great. If you don't, you can sign up for it right there. If you have NinjaTrader, that's also great. Give us your machine ID. But you should also sign up for the TradingView. Okay. All right. Let's get into what happened today. Now, it was kind of a lackluster day. I mean, it's okay. We got our goal for the day. It took us a little while to get it, but we did get it. But there was not a whole lot of follow through, at least in the first 2 hours. So on the NQ this morning, if you're going to read the spreadsheet, You have to read all the CFTC risk disclosures down at the bottom. On the NQ this morning, we made 26 ticks. We were break even on crude, +7 on gold, and +3 on the ES. So we're at 237.50 with one contract during the morning session. Today, with 5 contracts, it took 62 minutes and 6 trades to get to $637.50. Okay, so it took us an hour this morning to get to $637.50. That's when we got the goal for the day. Right, we had that 7-tick trade on gold, which put us over the goal. And we took only 11 trades this morning, so it was a pretty quiet day. We've had a few quiet days this month. It's been really a quiet month. I was just noticing this morning that we're only at 37.10 on the month so far. We're only halfway through the month, but we're still only at 37.10. That's a pretty low number for us. Granted, we did have 2 days that we ended negative in the room in the morning, but still, it's still a low number for us. So we're averaging $337.27 on the day for the month so far. We've got our goal on 89 out of 92 days, and that puts us at $44,755 on the year, averaging $486 per contract per 2-hour trading day on the year. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, then so far this year, you would have only had to work 28.41 hours on the year, and you would have averaged $1,301 per hour for the year so far. All right. All right. Let me get the question box out and see if anybody's asking any questions yet. So far, no. Okay. Hang on. I want to go shut off NinjaTrader while I'm thinking of it before it becomes an issue. Once we start streaming with TradingView. All right. I wanted to show you guys something else while I got this open. I only have a few minutes here, but I still want to show you. TradingView came up with a new feature this week. For those of you guys that didn't make it into the morning session, if you like the candlestick charts, instead of the open, high, low, close charts that we've been using, TradingView made it possible to have the candlestick charts on range bars now. Okay, so you can do the candlestick charts on range bars if you want to. To get a chart like this, if you want a chart like this, I don't know if you saw that, go to mytradingiq.com, trade rules. It's right here. Click on this. This is the candlestick chart right now. Okay, I'll probably make 2 of these links down here, one for the candlestick charts and one for the open, high, low, close charts that I've been using all the year. I've kind of gotten used to these charts now, but you know, for over a decade, we did these charts, and I updated the final bar on these charts to show whether it's going to be an up close or a down close. Okay, if the bar closes down, it's going to be red. If the bar closes up, it's going to be green. Okay, so I updated all of that for you. All right, back here to what we actually did do. Now, it's not going to take me too long to go through all this. I have 7 minutes to go through it all, and I can see most everything in one screenshot, just like this. In gold, we had 1 trade right here. We picked up 7 ticks on that trade. That's where we got our goal for the day. We didn't trade gold again. During the break, there was a trade here. And this one would have been coupled with that one. So there was 1 trade right here. And again, that looked like it went about 7 ticks. We really didn't have any follow through today with gold. And I'll show you why. Let me show you this on gold on the 30-minute chart. The morning session was right here. You see these bars right here that are all buried inside the ribbon? That was the whole morning session. Those bars right there. All right, all buried inside the ribbon. It didn't get outside the ribbon. That's on a 30-minute chart. All right. Now you can see, since then we've had some movement. That didn't look like the same chart, did it? Since then we've had some movement, though I can't see it. Hang on, let me go back and look at that one more time. This is gold. Yeah, this is the 30-minute gold, and we made it. Oh, okay, it looked like movement. It's not really that much. When it's this little bit of movement, it looks a lot bigger here than it actually is. But this was the movement right here, from here to here. Big deal, huh? Anyway, that was gold, and the crude oil was similar. We'll look at the crude. You can see almost all the crude in one screenshot the whole day. There it is. All right, and our 1 trade on crude was right here. It ended up being a break-even trade. That was it. 1 trade on crude. There's another one going right here. Now, this did not hit the ribbon. There was a question this one, I think, Mark or Dell asked me this morning, if it hits the ribbon, can you still take the trade? You can, even without the arrow, as long as the black line is in the green. Okay. But that was that. Now let me hit auto on that so it centers. And the ES. Now the ES was, well, we had 3 trades on the ES. Again, the whole day is right here. So not much happening there on the ES. Our first trade on the ES, we got 1 tick. Then we had a break even on this one, and then we had 3 ticks on this one. And that was it. Took it forever, but it did eventually get up to this level here. Okay, it did eventually get up to that level. It never got down below that level. Just chopped sideways all the way through there. And there's no reason to trade any of that. Okay, that was pretty much what I left it with this morning. So the ES, we ended up with just 3 ticks on 3 trades. And now the NQ. Is the NQ our big winner of the day? I guess it is. Yeah, I guess it is a big winner of the day. The NQ is going to take a few screens to show you, but not too many. That's it right there. All right, on the NQ, our first trade in here, we had +1. And then our next one was over here. We had +4 to get us to 5. Then we had a break even right here. And then we had a +4 to get us to 9. Oops, come on. And then right here, we had a +12. Yeah, +12 to get us to 21. And then we went from 21 to 25. So we had a +4. And then we had another +1 to get us to 26. And that was it for the NQ. Now, during the break, it looks like it had a little bit of movement here during the break. I wouldn't have done any of this until it started to show this. I believe that was all. That wasn't even during the break. That was after the break. So this was the first trade after the break right here. Would have been a break even for me. And I don't know that I've done anything through here. It's just been that kind of a day. I don't know what's going to happen here in the next, you know, when we do the 1 o'clock to 1:30 session. But for those of you guys who are in here, I'll probably have a chance to go over. Well, I'll probably take the time if I'm not doing any trading to go over some of the stuff that people just should know about trading. It'll be an opportunity, a learning opportunity. I don't see any questions coming in here, so I'm just going to say, if you have not taken a free trial with us, go here to mytradingiq.com. Right here, sign up for it. Sign up for your free 5-day training, 9:30 to 11:30. If you're going to sign up for the trading, sign up for the trading platform. You should also know the trade rules, right? Look these over. If you're going to be watching the short-term stuff on TradingView, then look this over, right? To get my desktop, just click on that, right? To get my desktop. And I will add another one of those on there at some point today. I will add another one of those on there. And let me look and see who all is in here right now. Okay, I want to see who's in the list. All right. Well, it is 12:59, so we're going to start the live stream here in just a minute. Again, on the recap of the month so far, we're at 37.10. It's averaging 337 per contract per 2-hour trading day. On the year, we're at 44,755. That is averaging $486 per contract per 2-hour trading day. So by the end of June, we want this to be well over 50. Well over 50. We'll see what the markets give to us. Let me jump over here for a second to the other screen and hit refresh on this. Okay, and shut that off and share the screen. Stop. All right, so if any of you guys that are in there right now have any questions about anything, feel free to ask them. Anybody that's on YouTube, anybody that's in TradingView, or anybody that is currently in GoToWebinar. Right? If you guys have any questions about any of this stuff, feel free to ask. Right now, what we would be looking for, we want to see trends, right? We want to see things trending. So this right here is your long-term trend. It's bullish right now on the crude oil. It's pulled back down into the ribbon right here. It gave an arrow right here. You really want to see it put in a higher swing right now. The gold just did put in a higher swing. You see its long-term trend is bullish right there. And over here on the NQ, it just put in a higher swing. So did the ES. So everybody's getting some long-term trend going right here. So on all these markets right now, what we need are pullbacks. Okay, pullbacks. So the way that we try to do the trading, the way that we do the trading, not just try, the way that we do the trading, right? Markets are going up and down, up and down, and up and down like that. We want to buy here and sell here, and buy here and sell here, and buy here and sell here. That's what we want to do. So in this case, over here, going up, comes down, buy there, goes up, sell there, comes down. You'd be looking for a place to buy down here, but it never gave it to us, right? So that's what we're looking for. A place for it to come down, hit some support level, we'll buy it, and then we'll look for it to go back up and sell it. That's what we're looking for over here. See, it went up, it came down, it went up, it came down, it's gone up, now we need it to come down. Find support, and then we'll buy it, and then we'll look for it to exceed the prior swing high and sell it. All right. So for anyone who's in here who's watching the live stream right now, this area right here, this area, this area, this area, this area, those are all identified by the indicators. You find support levels given by the indicators. And the indicators also let you know what trend you are in. Long-term trend and your short-term trend. Okay, so you know you're trading in the right direction. All of these right now. Long-term trend is bullish. Okay, see right here on crude oil, it's starting to drop down below this level. That is to let you know that you should probably not trade in that direction anymore. You should probably wait and let it prove itself to you. All right, that's what that is there for. So right now we don't have any trades. The closest thing we have to a trade right now is the NQ. This black line right here is oversold. If you have your long-term direction, which are these outer bands, if they are bullish, which they are right now, and the black line right here in the slingshot, the black line, sorry, not the slingshot, the black line in the ribbon is on the bottom, and it is not in the red, then you can buy an up close that pulls this black line, the lead line in the slingshot, out of the oversold. Okay, that's what you're looking for. Looking for something to pull this out of the oversold right here. See that bar closed down, it pushed it sideways. Now if this bar closes up, it'll probably pull it out. Now we used range bars in here. By using range bars, you can tell where the bar is going to close. This is 46.50, so I know it's going to close at 50. And because it closed there, we can actually buy it right here. I'm trying to buy it right there. Okay, so we went long right there. Now, what we anticipate here is that it's going to get up to this level right here at 56.50. All right, now this, I have an automated thing running on the NQ because the NQ is really fast. So I have an automated thing running on the NQ. If we get 8 ticks in profit, it's automatically going to bump the stop to break even, probably, for me. That's what it's supposed to do. Break even plus the tick is what it's supposed to do. And it says in here to bump at 21 ticks. Now, it's almost there. There it is. Okay, bumped it to break even plus the tick. 21 ticks is what it bumped it. The stop with the NQ is 20 ticks to begin with because it's on the 16 tick range. It's 20 ticks to begin with. Now, the high of the day of the NQ is right here. This is the high of the day right here. It looks like it's going to try to go through that right now. And it just took me out with 1 tick. But it looks like it's going to try to go through that right now. And if it does, let's go back and look at our big picture stuff. Okay, on the NQ right here. This is where it's trying to get up to, right here. So I know on the chart that doesn't look like that big of a deal, but it really is if you have money in it. Right about here is where it's trying to go to. Okay, and Now that entry that I had right there just gave me one tick, but this is where I anticipate it's going to get up to. And it's not in today's lesson, but in Thursday's lesson, part of the lesson plan, what we'd be looking for is the leg length. Okay, now we'll just use this as our leg length right here. See, that was the first leg length. That was the second leg length. This leg length exceeded it just a little bit. So we'd expect this leg length to exceed it just a little bit. You get up to that level right there. And that's what I would be looking for, right? So the reason we use range bars, as I said, is because if you know what the bottom is, you know the top's going to be. The top of this bar is going to be 4 points above the bottom. It's going to be, the bottom is here at 50.50, the top's going to be at 54.50. Okay, knowing that information ahead of time, excuse me, knowing that information ahead of time, if I wanted to buy an up close on the bar, I could put my buy stop limit order right there at 54.75. Okay, I don't actually want to do that right now. I do think it'll work out. See, it just did everything that I just said. Okay. These are 16 tick range bars. So if the low of this bar, if you look, I thought I had the open eye close going on this, but I'll put it on right now. If the, okay, if the low of this bar, you see right in here, the low of this bar was 50.25, so the high is going to be 54.25. See right there, it'll be 54.25. Oops, wrong bar. This one, 54.25. So like this bar, the low of this bar right now is 55.50, so the high is going to be 59.50. Okay. Now, I only got one tick out of that trade, but I think it's going to finish making the run right here. Finish this leg length up. It might pull back first because the black line is all the way up over here, down here in the slingshot. So it might go sideways a little and then pull back, but we'll see. In the meantime, over here on gold, all the way over to the left on gold, this is oversold and we're getting down into the ribbon right here. So we've got a low here of 23.9. 23.9. So we're going to have a high of 24.7, right? If this bar goes up straight from here, it would be 8 ticks higher than this, right? This is 8 ticks. This one is 16 ticks over here. This one is 8 ticks because it's 7 ticks plus a tick. These are 7 tick range bars. So what I would be buying here, 23.9 plus 8 is what you want to buy. So on the DOM, it would be right here that I would be buying. Okay, that's called the buy stop limit order, by the way. Right. Now that number just changed because the low is now right here. And let me put the open. Let me just do this. I go here and I go here and apply it all. Okay, so now on this bar, the low, you can see it right up here. The low is 23.6. You would add 8 to that. That would put it up at 24.4 is what you want to buy. All right, 24.4 is what you'd be looking to buy. Okay. So far it's been pretty slow here. We've had one NQ trade that actually triggered. We could get one here. I gotta get my DOM back up, but 23.6 is the low. So let's go here and get my DOM going again. Here it is. All right, so if the low is still 23.6, and it looks like it is, and that was 23.5, so you'd be buying 8 ticks above that, 24.3, like that. Okay, the NQ finished the leg length here. It did everything that we thought it was going to do, and then some. The ES ran up with it. I mean, this should actually send the gold down, not up. You know, in the window in TradingView, Maybe it's just my part that you can't see all that well. Anyway, so we've gotten, it looks like we've gotten a little lower here. Nope, 23.5 is still low. I'm looking up here for the low. Okay, still 23.5. So I'm still adding 8 to that. Now, over here on the NQ, guys, if we focus back over here on the NQ on the other side, this is oversold now. So we're going to be looking for that to move up out of the oversold to give us another arrow. All right, another potential entry on the NQ. Okay. Now below this bar is 68.75. Add 4 to that. 67.25. Add 4 to that. 4 points, I mean, not 4 ticks. 4 points in this case. Okay, it's dropping down even lower, and that's good. I want it to go down lower. I like a deeper pullback because we want a huge leg length like that. All right, so now the low seems to be stopping here at 65.50. So you'd be buying 4 points above that at 69.50 plus a tick, 69.75. Okay, like that. All right, and the ES is also starting to drop down. So we may get something on the ES too. Now the gold has a new low there of 23.3. The NQ just triggered up and it just triggered me into the trade. So I'm long the NQ again. Locking 2 ticks on this one, and the gold does not look like it's going to be a trade, and I'm out of the NQ with 2. Okay, but the NQ should run right here. So the entry point was good. The entry point was good on this one too. We had a great entry point on that one, and it's looking like it's good on this one too. We don't have anything here on gold. I don't think this is going to turn into a trade. It's got to do it on this bar. Okay, it would have to be on this very bar right now. The ES needs to pull back a little bit deeper to give us anything. It's not there yet, but let's pull back just a little deeper. Okay, don't know why that happened, but it did. And it's okay, somebody else is going to get kicked out right now. Right, and that only messed up my charts a little bit. Fix that, and that, and that. All right. So the crude oil is actually pulled all the way back down to test the ribbon. Now we're not going to do anything with the gold here, but the crude oil is, why does that look so much different? But the crude oil is, everything looks different to me. Okay, that's better. And change that to a 5-minute, back to a certain range. Right, that's what I thought. Okay, and back here, change that to a 5-minute, back to a 7 range. That's better. And this one looks normal. Let's do it anyway. Back to a 16 range. That was weird. Why is there a candle on the NQ that looks like it is 64 ticks where the arrow is? That's not a candle. That's a line that I drew. It's a leg length. Okay, it's just a leg length. That's what I was saying earlier. What I expected out of this trade right here was to exceed this leg length. Okay. So gold didn't end up with the trade. Crude did not end up with the trade. The ES is the only thing that's possible right now. The NQ is going to give us a higher swing. I know we have another arrow right here, but remember, this was the leg length. So it's going to exceed that leg length. And that would put it right up here at the swing high, which is just about perfect. from where it currently is anyway. Okay. Anybody have any questions? Anybody? Type them in. We have a little time left in here today. A little bit of time. About 14 minutes in this session. Okay. Gee, you might remember that from last week. When day 3 last week, I think. I went over the leg lengths. If we expand this a little bit like this, I grabbed this leg length from right down here. I think actually it was right here. And that's good, that's good. That exceeded it a little bit, that exceeded it a lot. And if we hit this leg length, it would make it the swing high, which is pretty much what you expect out of a trade. Okay. That's what I was basing all that on. The ES needs to pull back a little bit deeper here. And that's it. We just need that. All right, yeah, if you're not following us, it just occurred to me, if you're in here and you're not following us yet and you want to follow us, that'd be great if you started to follow us. If you have not taken a free trial with us and you want to, this is just a little peek at what we do in the room every day. Just a half an hour peek of what we do in the room every single day. When you're on the free trial, you get 2 hours of this every day, 9:30 to 11:30 a.m. Eastern time. And then we encourage you to set up meetings with us, with somebody. It doesn't have to be with me, but with somebody to get your chart set up and to get your, make sure you get your chart set up anyway. At the very least, get your chart set up. And make sure you understand what's going on. All right, because if you're going to take the trial, to take the trial, you just go here to the homepage at mytradingiq.com. You could do it at cfrn.net too, but you go here to mytradingiq.com and click right here. All right, you take the trial from right there. But if you're going to take the trial, you want to download or sign up for or somehow get indicators running on your charts. Get the charting platform in front of you. In the past, I used 4 range. Why the change to 7 range? Because last year, the 4 range was so volatile at the beginning of the year when Ukraine got invaded. The 4 range was just so volatile and nobody could keep up with it. It was just way too fast. Okay. We didn't even have the NQ last year either. Just in these 3 markets. Again, somebody is disconnecting and reconnecting. That could be me. That's funny. Could be another computer somewhere in my house. I don't think so, but no. All right, so let's see. Anyway, we're waiting here for a higher swing. this has got to put in a new high right here, and this is starting to pull back. This is oversold down here. The black line is oversold. That's what we're looking for. We want to pop out of the oversold. We ended up with no trade over here on gold and no trade on crude oil. And we're back to the ribbon here, but we don't look at the rules in here. Go to my tradingiq.com and look at the trade rules, or right at the top. It says all trades must come after a higher or lower swing. So what we're looking at right here is no higher swing. Right? This was the higher swing. This was the trade. We took one take profit, and it did not put in a new higher swing. There's no follow-up trade. This is a nice higher swing right here, though. Nah, that is me, Dwayne. I looked up the IP. It's me. See that? Somehow I'm logging myself off and back on. So it's probably my internet somehow. All right, so the ES right now, you see how the black line down here is buried in the oversold. We pulled back down to the ribbon. Now, an arrow off the ribbon is the highest probability trade. We're almost hitting the ribbon right here. That's pretty close. I'm hoping that we're going to get enough closer and we're going to get another shot at it. And so far, we just had these two little NQ trades. Now, that one turned out to be a great trade. This one turned out to be, not so great. And there's not going to be another long trade here on the NQ. 49.25. So what you would do right here, everyone. Yeah, 49.25 is the low. Because these are 7-tick range bars, the high of that bar is going to be 7 ticks above that. So add 1 tick to that. 8 ticks above 49.25 or 2 points above 49.25 is where you want to buy. That's right there. Okay, because the bottom of this bar here is at 49.25, the high of that bar is going to be right here at 51. Okay, right there at 51. Now, if you read these directions in here, all trades start out with 10 ticks of risk. All 7-tick range trades start out with 10 ticks of risk. And stop trails to break even after you get 4 ticks in profit. Okay, that's what we got going on right here. Yeah, if we did this, I mean, if you wanted to see this, you're on a 4 range. This is what it would look like on a 4 range. Right? The risk is 8 ticks with a 4 range. I mean, you can still do it on a 4 range. You're going to have probably more trades. The risk is 8 ticks on a 4 range. You still bump your stop to break even after 4 ticks in profit with a 4 range. Now, you're going to have plenty of opportunities here with a 4 range if you wanted to trade that. And this is just one off the ribbon right there. When the markets are really slow like this, I mean, we could jump back to a 4 range. It's certainly something we can do when the markets are slow. You don't have any follow through. I wouldn't recommend a 4 range on the NQ, but you could jump to like a 10 range on the NQ. And all of that is spelled out in here too. If you want to go on a 10 range on the NQ, 15 tick stop, trails to break even after 6 ticks in profit. I believe I created a thing for that, didn't I? I did right here, 10 range. So I created something for every one of these ranges that I have in here, even the 25. I didn't create one for the 4 though. To create one for the 4, all I would have to do is click on this, Click new and call it 4 range and say okay. And I don't want to target, so I'm not going to click that. I want OCO. The stop factor is going to be a trailing stop. The factor is initial stop is going to be 8. This is amount the trade needs to move in your favor before it trails. That would be 4. And this is the amount the stop moves. That would be 8. Okay. So what that does is it sets, you don't want it on every tick. You want this on once. And that's it. Now say okay. And we'll say yes. And now I have a 4 range one set up in here too. Okay. Now that I have it checked, I don't want that one checked. This is the yes, so I want to make sure I have the 7 range checked. Oops. I want to make sure I have the 7 range checked in here for the yes. All right, well, I don't want to check any of them, but if I were using it on the yes. You see, when you have it checked like that, it doesn't really mean that it's going to work. You have to highlight that to make it actually work. But that's a whole other lesson. Right now, it doesn't look like we're going to get a trade there anyway. I'll go back to the 7 range so we look at the same thing. Oops. I want this to be a 7 range, not that. Okay, so we pulled back a little bit deeper. Now 48.75 is the low, so 50.75 is what we'd be looking for on the up close on the yes. Now 48.50 up to 50.50. And it is 127. I don't think we're going to get another trade here, guys. Let me check in here and see if anybody's asked any questions. Nobody has asked any questions yet, but I will put this in here for everyone who's watching in the live stream in TradingView. This, again, is just a taste of what we do every single day. We've been doing this for over 10 years. This is a spreadsheet that we fill out after the end of every session. It's got our daily results going back over 10 years, our daily results. You guys can go back and look at that if you want to. That is pretty unique, I think. All right, there's going to be no trade here on the yes. I'm just going to cancel that. See, it dropped right through the ribbon. Now, the NQ is dropping through as well. The NQ is going to change direction. So you have a long-term direction. You're going to change that to bearish. Okay. Again, if you guys have not taken a free trial and you want to take a free trial, go to mytradingiq.com and sign up for the free trial. It's right there. If you're not following us and you want to follow us, then you should just follow us on TradingView. If you do that, you'll be notified every time we have one of these events, and we try to have them every day at 1 p.m. Next week, toward the end of the week, might be a little mixed up, but this week should be good every day, 1 p.m. I just don't see any more trades coming up here, guys. Don't see any more trades coming up. Dane, are you in here right now? You are in here. I have you on my list. I think you're on the list. I think that's your name. I can't read it. Dane, Sean, Dan, Ronnie, Ray. And now, let's see. No, we don't have any more trades here, guys. We're gonna have to wrap it up here, I guess. We're just about at the 1:30 time. And see, this right here is not a trade you would want to take. You'd want this to pull away and then pull back up and give you another look. Okay. Oh well, we got a couple of NQ trades. And this right here, we got 1 tick profit on it following the risk management strategy. And there was no reason to take anything else in that direction. This right here, it was looking like it was going to give us a long, but then it didn't. This right here, that happened before we got started. I wasn't really paying attention to it, but I was looking for a higher swing and then possibly a bounce off of here. Nothing on gold right now. The long-term direction has gone flat. All right. So for right now, I'm going to wrap up the live stream. It looks like with just a couple of NQ trades, both just one tick trades, but one tick is better than minus 20. Following risk management strategies. That's how you stay alive. Every trade that we put on has defined risk before you put it on. That is one of the benefits of using range bars. You know exactly how much risk you have to put on every single trade before you put the trade on. You also know exactly where to put the trade on. So if you want to know more, take the free trial. It's at mytradingiq.com. All right, we do this 9:30 to 11:30 every business day. Check us out. All right, with that, I'm going to wrap up the live stream right now. There. Okay, we'll head back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. It looks like you are just about ready.
Yep. Recap of the morning session.
Today it took 62 minutes and 6 trades to get to $637.50.
It's a good day.
Thank you.
Good job. All right, guys, we'll pick up here and we'll quickly walk through these different markets. Now, we already looked at the daily. Okay, and this little triangle thing we got here. 1, 2, 3, 4. 5th day of just stone cold sideways movement. Haven't been able to break this trend line on the top or this trend line on the bottom. Poked out of it on Friday, but then popped right back in it. So, this is what people refer to as coiling. That's one of the terms that's used, and typically, you know, as it tightens and tightens and tightens, it results in an explosive move one direction or the other. So, since we don't have crystal balls, we can't tell you which way it's going to break, but what we can do is trade what's in front of us. Okay, now we were talking about the ES. Remember, candle opened here last night. That's when the blowback session opened, and then I already showed this, but anybody that didn't get a chance to grab a screenshot. Now, members and free trial members got these targets last night at 6:10 p.m. Eastern. You're not yet on the trial, or you're not a member. I'm going to grab a screenshot. Go ahead, because we'll walk through each market real quick, and you can see exactly what happened. Okay. All right. So the market opened and came down to the zone. When price drops to a weekly zone, we expect support. When price rallies up to a zone, we expect resistance. Published the zone since December 14th, 2009. They come out Monday morning, 6:15 a.m. Eastern. So when the markets open Sunday night and I put out alerts, they're based on last week's zones. The new zones come out to all our members and trial members at 6:15 a.m. Eastern. From that point forward, any alerts that are issued are based on this week's zones. So on tomorrow's afternoon broadcast, on my screen, you will see this week's zones. Right now, you're still looking at last week's zones. So price got above the, so we never entertained the short target. Well, why not? Great question. Because when price drops to a zone, we expect support. Blue and climbing also represents support or an anticipation of higher prices. Just as red and falling represents potential for lower prices. Okay. Now we drew some windows in on Friday, It filled and filled and filled. If you were tuned in Friday, you'll remember that. If you weren't tuned in on Friday, you can go to youtube.com/CFRN. youtube.com/CFRN, and you can watch Friday's broadcast in its entirety, or you can just fast forward to the part where I'm doing this recap, just like I'm doing today. Okay. And you'll see when I drew these in, and we talked about each of these being roughly 2 points. Okay. Doesn't look like much, huh? Well, 2 points with 1 contract's $100. 2 points with 5 contracts is $500. 2 points with 10 contracts is $1,000. Some people will try to tell you that it's better to get more points. Well, there's some days that more points really aren't available. There's always at least a couple points in the S&P available, or 10 ticks in crude, or 10 ticks in gold. Okay. And you say, well, yeah, but that's only $100. Can't live on that. That's why, number one, you start out in SIM in your demo account until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. The mouse away. This proves to you that you actually understand the methodology and the strategy. So once you accomplish that, the 2420 blueprint will give you the green light to go live with 1 contract. Now that contract is going to be funded with your startup capital. Your goal now, once you've been qualified to trade real money, is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add the second contract. The difference between the first and second contract is the first contract is funded with your startup capital. The second contract is funded with profit you actually earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. Okay. Now, you should never feel compelled to increase your size just because you qualify. Okay. If you get to 5 contracts and $500 a day is a comfortable living for you, covers your bills and all that, then there's no pressure. But the blueprint provides a very detailed way to progress. Remember, you don't come in guns a-blazing trading 10 contracts on day 1. Not in your demo account, and certainly not in your live account. You got to treat the demo account exactly how you treat a live account. How you plan to treat your live account. Okay? It's real easy because it's monopoly money in the demo account. If you get in the hole, you just put on 50 contracts or whatever, some crazy number. And, a couple points and you're green for the day and you're like, oh, I'm getting the hang of this. Well, no, because you realize how much money you got to have in your account to put on that number of contracts? Well, your demo account comes preloaded with usually 50 grand. But are you really going to open an account with 50 grand? Probably not. The average opening balance World of Futures is probably somewhere between $2,000 and $5,000. Okay. You can trade one S&P E-mini contract during the day session for $600 with most brokers. Some may charge more, some may charge less. The discount brokers, careful. In theory, you get what you pay for, but that's not always true. I've paid for stuff and didn't actually get what I paid for. But anyway. Moving on. So once price got above the BBC, Remember, it stands for bull bear cross. Bullish above it, bearish below it. Blue is bullish, red is bearish. Okay? So once everything's in line, we look left to see where there might be potential obstacles to our trade. Remember, I said that earlier. You've got the target. You're able to determine which target price is trying to reach. If it's below the BBC, it's trying to reach the zone below or the target below. Now, this was Friday. This is today, which started last night. The vertical line separates today from Friday. If I scroll back, there's last Thursday and last Wednesday, etc. Okay, so after hitting the target, I want you to look. You see this right here, this bearish cross? Okay. When there's a bearish cross that leads to an extended move, the first time price returns to the area of the bearish cross, it is most often, quite often, resistance the first time up. Okay? And that's exactly what we saw happen here. Same is true of a bullish cross, but in the other direction. That's part of learning to read price action. So blue and climbing turned to red and falling, just like it did over here, right? We had a pullback to the BBC and it held. The pullback holds more often than not. Leg and a retracement, pullback holds. Leg and a retracement, pullback holds. Leg, retrace, leg, retrace. Pullback holds for an hour and a half and then eventually gives way. And while we know that the pullback holds more often than not, we do know that eventually it will trade through the BBC because the market just doesn't trade forever in one direction. Okay, so as blue and climbing turn to red and falling, that's an indication that maybe the high of the day is in the session. Price gets below the BBC, red and falling is present, and so what does price do? It drops right to the zone and finds support. It spiked it, okay? But you can clearly see the zone is 4129/4130. Remember, when price drops to a zone, we expect support. So proven otherwise. Okay, so we got back above the BBC here. When climbing, it'd come back into the picture. Yeah, right here. And we hit the target again. Now, if you were really conservative and waited for on this climb, if you waited for price to get above this obstacle, and maybe you just entered here, like 41.45. That's 6 points to the target. $6 points at $50 a point is $300 per contract traded. Earn the right to trade 10 contracts, it's through your ran. Now, the market's not always going to give you a 6 point straight move like that. But how many times could you have grabbed 2 points on the way up? Question box. Whole lot of times. Yes. Okay. All right, I got to pick up the pace here and get this done. All right, so we went up hit the target again, and price came back down through the BBC, but it ran into blue and climbing, which represents support. So you wouldn't want to trade this. So price got down here. All right, on the Dow, I got to really rush this up, guys. So I'm just, here, I'm going to have to put you on hold. All right, sorry guys, I had to take that call. Okay, so we're on the Dow. Market opened here last night. Okay, we had blue and climbing, so we never thought about the short target. Okay, blue and climbing got us up above BBC. We got above the weekly zone. Got above this high. We got above this swing high, and it took us right up to the target. And then blue and climbing became red and falling, and we dropped through the zone. Found support right about this swing low here. Buyers came in, drove us up to the BBC. We spiked up and touched the target, but the pullback held. But right now, red and falling, as you see how it's curled underneath price. So now it's potential support. When red and falling gets directly below price, that's a good indication that it's on its way to turning to blue and climbing. Now, it could continue lower, okay? But you should be very careful right here. Let the market prove itself, okay? There's a nice window of opportunity right there if price continues lower, if it overcomes the obstacle. Just because there's an obstacle doesn't mean price can't overcome it. It just means you need to be aware of the obstacle. Okay? So, just to be safe, you can take this down a little bit lower. From 33,278 to 258 would give you a go for the day. Okay? But this may be it for the leg down. Got to be patient and see. See how price is already starting to kind of bounce off the support area? These are 30-minute candles. You got to be patient. Wait and see what happens. Russell. Market opened here last night. We had blue and climbing, so we never entertained the short target. Once we got above the BVC and had blue and climbing, just like the other markets, boom, off we go. Now, to reach your goal for the day, just like the ES, you only need 2 points, $50 a point. The Russell. Once we had all systems go, I mean, you're ultra conservative and waited to 1750 up to the zone. That's 3 points. You only need 2 points to reach your goal for the day, but kept going. 59.8, and we pulled back to the BBC in the zone. The pullback held. That sent us up to the target again. We didn't quite make it to last week's zone, but if you look left, we spiked the high put in on Thursday by just a little bit, and then quickly reversed. Okay, now we're pulling back. We may find support at the step line where we're at right now, at blue and climbing, at the BBC. Pull back to the BBC holds more often than not. You should always expect it to hold until proven otherwise. In Q, here's where the market opened. But we can't think about the short target as long as we got blue and climbing in the picture. Gets us above the BBC. Get a leg. Get a retracement. Another leg, we hit the target. Now, the NQ, you only need a 10-point move. Reach your goal for the day. So once you have the bullish cross right here from 13,392, 13,402, that's $200 per contract traded. All the alerts, the initial target, the logic alerts, the initial target is good for $100 per contract in that market. With the exception of the NQ, the initial target is $200 because it requires more risk because the NQ tends to be more volatile than the other markets. So now we're above the BBC. We got blue and climbing below us. So we know we have potential resistance here. So if price crosses back above the target, then you've got a 2-point window of opportunity there. More than that, 13,458. Yeah, just call it 58 to 68. It's 10 points, $200. Okay, let's see. Crude oil. Here's where the market opened. We're below the BBC, but we had blue and climbing. So we couldn't think about going short until price got below blue and climbing. And as price got below blue and climbing, it turned it to red and falling. And we dropped like a rock right to the target, to the tick. Now, we don't have any obstacles here. So 69.80, down to 69.60. That's $200 per contract traded. And then the market found support at the zone. That's what we expect until proven otherwise. Price rallied, got above the BBC, red and falling, turned to blue and climbing. We hit the zone and consolidated. And then we ran right up to the long target. Looks like a tick. Target was 71.70. We made it to 71.69. Now the step line has crossed blue and climbing. See how on the move up, the step line, the black line is on the left side of blue and climbing? Once it crosses to the right side, that tells you price is going to attempt to pull back to the BBC. It's true on a long and on a short over here. As we were falling, you got price, step line, red and falling. Okay. Once that step line crossed red and falling, what did we do? We pulled back to the BBC. Over and over again and again. All right, gold. We opened here last night. This is the opening candle. So we had a gap lower open. We gapped to here, ran down, ran back up, had red and falling overhead. You may have taken a short here, thinking we would go back at least to this low, but we didn't. So you might have got stopped out. That's why it's important to always have a hard physical stop. So we get a leg and a retracement. Pull back holds. We get a leg and a retracement. The pullback holds. Leg and a retracement. The pullback holds. It's a little sloppy, but it really ultimately holds because all these candles are still touching the BBC. The exception of this one little guy right here. Okay. Get back above the BBC. Red and falling turns back to blue and climbing. And we run to the target. Pull back holds, run to the target again, and we may be pulling back to the target or to the BBC again. Okay. Silver. Here's where we opened last night. Now, when silver moves 2 pennies, that's worth $100. So we're above the BBC. We've got blue and climbing, right? Got a green candle closing here. This candle opened at 24.20 and ran up to 24.27. That's 7 pennies, $350 per contract traded in that one candle. And then it did it again. And then we got below the BBC, but immediately popped back above it. We're above the BBC, we have blue and climbing, and we make a run at the target. We don't quite make it. But this candle opened at 24.24. And we ran up to 24.34. That's $500 per contract traded. And then we got below the BBC, but all these candles are still touching. Okay. So we not only need to get below, we need to pull away. Just like we got above and we pulled away. Okay. And we pulled back. And that gave us right here, this candle's beautiful opportunity. Opened at 24.24 and ran 12 pennies to 24.36, $600 per contract traded. Now we're above the BBC along with blue and climbing. So price is sort of trapped between the step line and blue and climbing. But we're above the BBC, so as long as we're above the BBC, we anticipate higher prices until proven otherwise. On the 6E, not a lot to say about the 6E. Okay. We opened below the VVC, but we had blue and climbing below us. So we're not thinking about the short target. It's not until here that we start thinking about the long target. And while we didn't make it to the long target, where did we get about? Oh, about 850. Need to run to 930. Get the goal for the day. That didn't quite do it. This move would have given you the goal for the day, but we did not touch either the short or long target. It's just been kind of sideways consolidation with upside bias at the moment because we're above the VVC and we have brings us back to the daily chart. We're still inside that triangle. Become a lifetime member. Go to eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI. Send an email to support@cfrn.net. Everything a trader needs, all under one roof, one low price. No recurring fees. Not weekly, monthly, annually, never. No upsells. No nonsense. 9 out of 10 new traders fail because they don't have someone to teach them how to trade. That's why we give you 2 hours of live training every trading day, plus unlimited one-on-one mentoring, a strategy and indicator set that is fluid across all markets and all time frames. As a passport holder, you'll also receive the Logic 247 alerts and the concierge trade alerts. And of course, you'll have access to the Thursday night members only workshop. It truly is everything a trader needs, all under one roof, one low price. You can become a lifetime member today by simply going to eminifuturestrading.com. Let's wrap this session up with our good word for the day. Friday, we talked about don't wait, enjoy your life now. You know, we as part of the human condition, you know, it's like, well, once I achieve this, then I'm going to be happy. Once I own this, I'm going to be happy. Or when that happens, I'll be happy. Or you can just be happy. Don't worry, be happy. I know it's easier said than done, but with practice, you'll find it's simple. Because everything that's going on in this world right now, it's temporary. We have an eternity ahead of us. You know, some people question, does your body have a soul? Well, the truth to this question, or the answer, is you are a soul and you have a body. You're not a body and also have a soul. You are a soul and you have a temporary earthly tent called your body, where your soul resides, till you're called home or Jesus comes back. Whichever happens first. Okay. Money matters in marriage. Everyone knows, you know, there's an alarming divorce rate in America, and I think probably in the world, except in countries where it's like illegal. I've read studies and statistics that say as much as 70% of all marriages that end up in divorce are because of financial reasons. Proverbs 15:27. He who is greedy for gain troubles his own house. Today, one of the biggest sources of conflict in marriage is money. That is because a husband and wife often have opposite ideas about how money ought to be used. Stop and consider the words delayed gratification. When one spouse is willing to delay purchasing something until their financial house is in order, but the other isn't, battle lines begin to form. Another disagreement that can arise is deciding when and for what credit should be obtained. This can be treacherous territory. Nothing irritates a disciplined, thrifty person more than living with someone who wastes their income and their future earnings on things that aren't truly needed. It's a sad fact, but we spend money we don't have to impress people we don't even like. Shameful, but true. Another potential minefield in marriage for many of us is deciding when and how much to give our children. Because we love them so much, we want life to be easier and better for them growing up than it was for us. But it takes a steady hand to hold a full cup. The Bible clearly teaches the virtues of hard work, living frugally, saving, building, and producing by the sweat of our brow. And if our children don't learn these virtues the right way while they're living in our home, there's a good chance they will learn them the hard way while building their own home. So here is some good advice. Stay out of debt as much as possible and be extremely cautious with credit cards. Chances are you're getting more pre-approved credit card offers today than you ever have in your life, no matter what your credit score, because of the increased interest rates. Almost every day I get an offer in my mailbox, and I shred them, but I just look at them first just to see, and it seems like the average interest rate now is about 33%. Now, I'm sure you can find lower ones, and there may be some even higher. I don't know. I think most states have a limit. There may even be a federal limit on how high an interest rate can be charged, but very careful. Their misuse. Now we all know that we need a credit card in order to rent a car, buy an airline ticket, all these things. But your goal should be to always pay that off in full each month by the payment due date, so that you're using their money and you're not paying interest. Pay it in full every month. Don't carry a balance from month to month. Not only will that keep you from having to pay interest, but it will, over time, increase your credit score. The misuse of credit cards can weaken your family's stability and future. Credit cards should be labeled danger. Handle with care. Jesus put it this way in Luke 12:15. Beware. Guard against every kind of greed. Life is not measured by how much you own. That is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.